Over the past few years, the global economy has been in a state of uncertainty. Crises, military conflicts, high inflation, and tensions in international relations have made the situation in the markets unstable and full of risks. However, even in such difficult conditions, investors are finding profitable securities and multiplying assets. Analysts in the investment strategy for 2025 analyzed the prospects of the world economy and gave their recommendations. In the basic forecast, analysts expect the world economy to slow down in 2025. The main event of the year, the experts called the entry of Donald Trump into office as President of the United States. At the first stages, it may lead to strengthening of the American and weakening of the European economy. However, much will depend on how Trump's election promises will be realized, including those related to taxes, tariffs, and the fight against immigration. Overall, growth in the U.S. economy is expected to slow due to a cooling labor market. In the Eurozone, growth will remain subdued but may accelerate slightly due to the positive impact of slowing inflation on real income growth, rising defense spending, and monetary easing. The injection of money starting in 2024 should support the Chinese economy, but the risk remains for it to escalate trade wars with the U.S. after Trump takes office. The world's major central banks, the Fed, ECB, and Bank of England, will continue to normalize monetary policy, but the speed at which countries cut rates will vary depending on the state of the economy. No. 1. VanEck Gold Miners ETF. For the precious metals market, 2024 has been one of the most successful years on record. The price of gold on the spot market rose by more than 30% during the year and updated the absolute historical maximum at $2,790 per troy ounce. Experts note that the interest in gold will remain for a long time, taking into account the tense international situation and fragmentation of the world economy. VanEck Gold Miners ETF is the largest exchange-traded fund investing in gold mining stocks around the world. It contains securities of about 50 gold mining companies from different countries and provides the best exposure to the global gold mining industry. The focus is on securities of issuers from Canada and the U.S., which account for more than 68% of the investments. The price of the fund's shares is largely dependent on the price of gold, which is still relevant as a protective instrument in times of economic instability. VanEck Gold Miners ETF has an AA rating with MSCI ESG Fund Ratings. The MSCI ESG rating assesses the resilience of fund portfolios to long-term risks and opportunities arising from environmental, social, and governance factors. In addition to the NYSE, shares of VanEck Gold Miners ETF are listed on the London Stock Exchange, Deutsche Börse, SIX Swiss Exchange, and Borsa Italiana. Analysts recommend buying shares of VanEck Gold Miners ETF with a target price of 44.8 and a potential upside of 24.8%. No. 2. ENN Energy. According to experts, the Chinese stock market remains cheap but speculative. Foreign funds avoid long-term investments in the economy of the Celestial Empire, as geopolitical risks remain relevant. However, the country's authorities are taking stimulating measures, injecting money into the market, and maintaining a soft monetary policy favorable for shares. This allows balancing the risks with a positive impact on the economy. Through a new government spending program, the Chinese equity market has delivered significant returns by the end of 2024. ENN Energy is one of the largest distributors of clean energy in China. The group's principal activities include the investment, construction, operation, and management of natural gas pipeline infrastructure, vehicle and ship refueling stations, and integrated energy projects, as well as the sale and distribution of pipeline gas, LNG, and other forms of energy. The group is also engaged in energy trading and provides other energy-related services in the PRC. The group has implemented projects in 187 cities in 17 provinces, municipalities, and autonomous regions in China, namely Anhui, Beijing, Fujian, Guangdong, Guangxi, Hebei, Henan, Hunan, Inner Mongolia, Jiangsu, Jiangxi, Liaoning, Sichuan, Shandong, Yunnan, Zhejiang, and Shanxi, with a population of 94.57 million. The group has also implemented 62 integrated energy projects in key regions, covering 26 provinces and municipalities. Analysts note that the trend of rising electricity consumption and decarbonization will support the company's projects. In the latest report, ENN Energy showed strong sales growth in the segment of integrated energy projects, as well as improved performance in the gas business. Experts expect the company's shares to grow significantly if the stimulus measures of the Chinese authorities help to restore the country's real estate and industrial sectors. Analysts recommend a buy on ENN Energy shares with a target price of HK 78.5 and a 44.3% upside potential. No. 3. MTR Corporation. MTR Corporation is an operator of rail-based public transportation systems in Hong Kong, mainland China, the United Kingdom, Australia, and Sweden. The company occupies more than 50% of the public transportation market in Hong Kong and is actively developing international destinations. Experts consider MTR securities as a promising option for a long-term purchase due to the growth of investments in the construction of railroads in China, as well as strong indicators of the company's core business. The growth of investment in railroad construction in China from January to November 2024 amounted to 11.1% for the year, according to China State Railway Group. In the first half of 2024, MTR increased revenue by 6.2% year-on-year to $29.3 billion and net profit by 44.7% year-on-year to $6 billion. The stock is considered relatively cheap with strong financials and good growth potential. Analysts recommend a buy on MTR shares with a target price of HK 35.7 and upside potential of 40.8%. No. 4. Uber. Uber is a leading U.S. automobile transportation operator. It provides customers with a technology platform to connect passenger and driver. The company's strategy is to gradually transition to electric vehicles by 2040. For this purpose, it has already signed an agreement with China's largest electric car manufacturer, BYD. In addition, Uber is showing strong financial results and is actively expanding its business into foreign markets. In the third quarter of 2024, Uber's revenue grew 22% to $11.1 billion, and the monthly number of unique users grew 13% to 161 million. For 2024, the company has significantly increased its presence in Europe, Africa, and the Middle East. Analysts consider Uber stock a great idea for a long-term investment and recommend a buy on the stock with a target price of $94 and a 44.8% upside potential. No. 5. Vertex Pharmaceuticals. Analysts consider biotech companies to be the most interesting in the U.S. healthcare sector. In their opinion, it is biotech that can please investors with new breakthroughs and approvals from the U.S. Food and Drug Administration, FDA. Vertex Pharmaceuticals is an American biotech company. It is a pioneer in the treatment of the rare genetic disease cystic fibrosis, as well as a developer of drugs to treat genetic blood disorders. According to experts, it has significant prospects for development and adding to the list of approved drugs. For example, in late December 2024, the FDA granted approval for Vertex's new experimental combination therapy for cystic fibrosis, and in the coming weeks may approve another new experimental drug from the company for the treatment of pain syndrome. Analysts recommend a buy on Vertex Pharmaceuticals shares with a target price of $584.8 and a 41.9% upside potential. No. 6. Regeneron Pharmaceuticals. Regeneron Pharmaceuticals is an American biotechnology company with a pipeline of 9 approved drugs. It is engaged in developments in cardiology, metabolic and infectious diseases, and immunology. As experts point out, the company's shares sagged badly in the second half of 2024 after losing a court case over the patent protection of one of its drugs. However, the company's clinical trials are progressing well. Regeneron is conducting 54 trials for both new and approved drugs. At the same time, 11 of them are in the final stage. Analysts recommend a buy on Regeneron Pharmaceuticals with a target price of $978 and a 33.3% upside potential. If this video interested you, please subscribe to my channel and let's invest.